Friday, September 29, 2023. Last trading for the month of September in 2023. Last trading day. Market is flat. The VIX is coming down a little as the market is up 0.5% or so. So, not much really going on. I mean, we have a little gap up, and that's that. Fighting it around the 200 days moving average on the Dow, into QQQ. The other two are way above 200 days moving average. Have like that's a false hammer bar, so but it's not a continuation of an uptrend, so there's no trade in that sense. Russell 2000 ETF, that was the weakest of the three. Looks like for now it we can draw a resistance, actually a support line here. Well, what's going on? Yeah, well, there we go. Wow. 1, 2, 3, 4. Yeah, connecting 4 low on the daily, and that's a nice resistance line, pretty much. And then bounced off, rounding off, but still pretty heavy because it's below the 200 days moving average. That's the Russell 2000. IWM is the ticker symbol. SAC, Semiconductor Sector Index. After a really nice run this year, came off, went below the channel level, this level, and this kind of like triple top, and then into the ABC pattern. Right? You have 1, 2, 3 up wave, and then towards the end of the up wave, we go into ABC zigzag. Pretty much that. Financials, you can also draw a nice support line across into here, pretty much. Even extend this. Oh, okay. This trading channel, regression channel across. You see this pretty much. Okay, so the trade we put on a couple of days ago today is 1, 2, 3, 4, and then today is a weaker day for it to come back a bit, come back a little after the trend. Again, the absolute stop loss level is all the way down here. The previous low is here. There I do. Oh, okay. I don't need that. Okay, there we go. The problem with this is really the MACD giving us a little reversal. That's why it dip below the regression channel on that nice up run. Right? And you can see that when you have this is kind of like a reversal retracement signal. You have the latest peak lower than the previous peak, right? You have this peak and this peak, right, on the uptrend, while the MACD, MACD, moving average convergence, divergence is lower. Now, moving average is more of a momentum indicator. When you have this, instead of uptrend, like a nice uptrend should be like this. While the trend continually goes up, so is the MACD. Right here, you can see the momentum die off. So this is why as it tapers off on the retracement, you have a break below the breakout level of the previous breakout peak, which is right here. Eventually recover, so we were really using the Dojian channel on this trade. So we have this, let's go to XLE. There we go. Okay. So the trade triggered 2 days ago when it closed back above the midline of the Dojian channel. And then when it make new high, and then that's the trade triggered. Yesterday was a good day. I was hoping it will run one more day closer to the previous peak, which is the all-time high, the resistance. This is the resistance line. This is the support line. Right here. So you have this support line, and then you have the resistance line, which is normal. I'm hoping it get closer, but it does not. Now the question is, where do you put your stop loss? Well, it really depends on how aggressive you are. Right now I have this bracket right below this bar is just the cautious stop loss. It's around $90.30 or so, 40 cents, 40 cents. And your profit target will be when it get close to peak, previous peak. That's your profit target, if you want to play this very cautiously. For a trend following trade, the big trade is to put it below the previous low right here. So 88, way below, 88.70, 88.60, so even 88.50. When it break below the previous low, and you're actually looking to add. You're looking for this to break, and makes new high. That might be your actual, that could be your actual profit target, or wait for the pullback and add a second level when you see buyers coming in. So what I want to see is, in actuality, this trend continue. It can do its thing inside this area, this whole area, right? Inside the previous low and previous high. Let it do its thing. And either wait for it to break up and then buy more, or wait for breakup and retracement and buy more using a false hammer setup on that. Or, and you get out when it breaks below previous low, so it might go down, the whole thing might turn. That is the actual trade. That will be the bigger trade, the better trade. The trend following trade is you're looking to add to this position, you're looking to add to this trend. And the only reason you get out is because it broke down and the trend does not hold yet. You might enter actually later, but you don't want to take all that pain when it breaks down on this level, previous low. And if it break up on the previous high, you add another unit, you buy another unit. That's trend following. That's where you compound up, as I said. Just like investing, that's where you make the big bucks, big money. Right now it's coming in pretty hard in actuality. So it might just continue to move or even break down. As long as it's inside this area, that's fine. I would take this loss to go for the big bucks. And that's the nature of trend following. So yeah, yesterday was a problematic. You see a little tail on this yesterday. So let's go inside. Let's go to the intraday time frame to see a better picture of what's going on these few days. So we go inside into the 1 hour bar from the breakup, right? And you can see, wow, there's a momentum down. This big momentum down means, well, sellers are in charge right now until buyers comes back in, that's all. Yeah, it's just whipping around this channel. So I have it initially set when I open the trades. I can take the stop loss here, which would be 940. That will be a dollar loss on your share, which is small. But the big trade, the actual real trade, is don't get out. Don't get out unless it break outside of previous low, which is all the way down here. Which is on these bar, previous low. And you want to add. The nature of trend following is that you take a lot of smaller losses, but when you add 3 times compound up, not only you make all the money back, you have 3 times level, right? 2-3 times level, or even you go all the way to the moon, continue to level every up of the way, every peak breakout, every pullback, continue to add to like 5-10 units. And think about that, you're 10 times, 5 times, 10 times. That will make really huge return. But you have to withstand, oh my God, this guy is like crapping out now. Yeah. So my entry price around actually around, what's my entry price again? Let me check. Around 91.50. Around here, around 50. Here. Oh, how did that get messed up? Right now, yeah, 91.52, 91.53 is my actual entry price. Let's fix that. Let's fix that. 91.53 to be exact. Yeah. Yeah. So it went below my entry price. So this is just mark-to-market loss right now. Yeah, that's fine. It is what it is. Yeah. I won't add. I'm not gonna add more. Only reason to add is I see buyers comes in, I see a false hammer again. Otherwise, I don't want to add until it breaks up. When it breaks up, it's like adding a breakout trade. Right? So you add only the instrument is going for you, not when it's going against you. You don't compound down, compound up. Okay, that's that. I will just leave it as it is. Make sure I don't have like accidental or floating order out there. So again, you have 2 ways. You can play safe, get out when it breaks down here, or you can wait for the big one, or you turn into a big trend following trade. Is your choice. My choice, I'm writing this. I think this is just going to ping pong sideways for a while instead of going straight up for me. It might ping pong sideways, scale out the weekend, and I don't mind taking $1, $2 loss a share on this. That's the risk I would take. And I'm going for a lot more. I'm going, if that's the case, right? So let's do that. Let's mark this. What if I want to take the big one? This is my stop loss. So let's get it to 1-to-2 ratios, at least 1-to-2 ratio. Okay, risk reward 1-to-2. And so my profit target is 97, around 97. Yeah. So for every dollar I risk, I gain $2. In actuality, I will gain more because if we break up, I'm going to add another right here. I want to add more. If it breaks up, and then it breaks up after I add this, it pull back and then one again, and then if it break another level on the breakout, I add a little more, pull back, I add a little more. You see how I can easily add 4 more units when we break 2 level, and I'm 5 times the original size. So every time it goes up, yes, when it comes down, it's going to be a lot more pain. So if it turns, I have 5 times original position, and I'm going to take all these low until what? Until if my final stop loss or even in between. So that is the risk I'm taking. Right? Much bigger risk, much bigger reward. And as long as the trend stay intact, that's fine. Right now, I open the trade on the inside level instead of waiting for the breakout. Right? Because of the Doji and channel midline crossover on the daily. The 1 hour is still staying up above the mid-level line of Doji and channel, this orange line. So that's okay, that's fine. So now we start compressing that. Right? 30 minute already crossed down on the lower level. Right? You see the Doji channel line, and then 30 minute cross down. So definitely the shorter time frame is getting more bearish for the short term. go. Going to the 5 minutes, 5 minutes is just a lot of noises in between. So 15 minutes, the intraday 15 minutes, a little bit more cleaner, but it's still, yeah, it's doing what it is. Yeah. You have to let the market work itself out. You have to wait for it to show a sand. Does it want to go up above here, or does it want to go down, or just go sideways? As it comes in, so my mind thinking, how do I add traces? How do I potentially get more gains? I can start thinking about selling options when it turn again. So it depends. It depends how it plays out, how it develops, and what it shows me. That's why it's so important to be able to read candlestick, to read the bar. Where the buyers, where the seller, what are they thinking, what are they doing right now? Yeah. But to tell you, this is a rounding. Who knows when it's going to turn up again? Right? Nothing goes straight up. It always go up, down, like a wave, mini wave, and then big wave, mini wave, big wave. Mini wave, big wave, mini wave, bigger wave. This right now is inside this, within this smaller, the peak and the low. It's still inside bar, so you have to wait for it to show its hand. You have to wait for it either break this peak or break this low. Right? Then it go inside, then it play inside the bigger channel. So there's smaller level and the bigger level. You gotta be able to see all this different level. Right? The big level is previous low, previous high. Right? That's the bigger level. Within this time frame, this zone, previous high, previous low. Right? So you have another level, smaller level, and a bigger level. The bigger level is the one that's more meaningful. Small level, depends on your time frame, depends on your risk tolerance. Do you want to just take the small one, or you want to go for the big one? The small one, you get out here, your risks, you will get out at the bottom of this red area, and your profit target is once it break. But I am going for the bigger trend following. I'll tell you. Initially, when I open the trade, I have a smaller, tighter one because I'm not sure where it's going to go. As I see, is more upward bias. The bull is still in charge. Even this is the 1 hour bull is in charge. I'm saying, okay, I need to transfer from this trade into this bigger trade. As it comes down, I might go back. So it's back and forth. That's the art and science of trading. It's where do you set your level? Where do you go for the big trade, or you take the small losses and call it? Like 50-cent loss versus $1 loss. Right? Or dollar profit versus $2 profit. Matter of fact, if things holds up and I see big momentum, I add to this trade. Yeah. So I'm jumping right into a level 3 already. Level 2 is trying to do this trend following using a Dolce channel. Level 1 is just learning candlestick, learning support and resistance, learning the very basic setup of a trend, how to identify a trend, and when to add the trend to the trade. You're gonna learn the false hammer setup and learn the breakout strategy. Now this level 2 is Dolce channel, where you're going to use the ATR, the volume, the ATR advanced, ATR, volatility range based. What's the name again? Anyway, I don't want to interrupt my thought. Think about that later. The ATR, the volume, and the Dolce channel. Try to read the market and try to see where you want to add, combine with the level 1. Level 3 is deciding actually how to expand your trade into a trend following, adding to the trade, or do you compress back in the small time frame and minimize your risk? And on top, do you add option play to it? Now the fourth hammer, Thor's hammer, THOR, Thor's hammer, that is actually an option play. That's why it's a very high percentage of winning. But when you lose a lot more. For example, just like Lee, that opened it, that's one is crapping out. So I opened it and it did one of these. Right. But today, looks like it want to come back up. Only 1 hour though. On the daily, let's go to the daily. The daily is that's the meaningful one. Yeah, the daily, it did one of these gap down and then get back up. But I have a 9 delta, which is way far away at 34. So it actually went into red, mark to market, and then get back into green. But that's fine because it's a month long for trading with options, so that's fine. And then Expand is holding up nicely, so this is I'm making money. That's a false hammer. All right, 2 false hammer, Thor's hammer, and then great, it's going for me. So that's that. That was like last week's level 1 trade. This week I had introduced the next level, level 2, which is starting to learn about trend following techniques. And I cover a little bit about level 3, where you start to really read the market and determine, do you want to continue take the big trade or compress down and take small losses. That's always the hardest part in trend following. For me personally, I'm a lot less risk averse, so I will always jump from small into big one. I hate to jump back to the small one actually. I rather take the big one, take the big trade. There's no point for me to take small losses, a lot of small losses. I don't mind taking up small, intermediate or bigger losses because I'm going for more of a home run. And energy, ready to run, they can run really well. Yeah, it's this thing. Now the big thing is that the problem is the MACD. So I have a bigger retracement instead of staying inside this up channel. I have a bigger retracement. Now it went back. So if I extend my regression channels, everything looks alright. But of course, I want to leave it here from the previous peak, so I can confirmation remind me, okay, the momentum definitely died off. This is why, although it broke up to the mid line above, right, it's hugging, is above the 21 days moving average. Right? This is the moving average chart. Right? It's above the 7 days. Right? It's hugging the 21 right here. It looks like a stop here. Right? It might test the 7 and then eventually go up or go down. Who knows? Right? But within this channel, within the low, previous low and previous peak, right, the support and resistance, immediate support and resistance. Right, this is a resistance. Mark that resistance, and this is the support there. Previous low, previous peak. Within that, it's trading inside, and I will let it work out its thing. But I'm thinking, because coming off a previous trend, it can go sideways and then eventually it breaks up. It might break down before it breaks up. That's the problem, because it breaks down, I must get out first. I don't know if the whole trend is going to change and start retracing or even collapse. So I will get out the way first. And then if it comes back in, I see buyers and reason for false hammer, then I will reopen the trade again, hoping and thinking and see if it's the whole original trend, this whole trend is still intact. So up, sideways, up is fine. Up, sideways, down, and up is fine. Up, sideways, and then turn around. That's when you really lose money, because you can lose this whole chunk, and you cannot recover that on this instrument, this trade, and that's the nature of trend following. And you're gonna have some of these, like this breakdown. You think this is your stop loss, and it broke down, and you have to get out, and then eventually you see, oh, they're buying you back. Oh, I gotta get back in somehow, and then make a new high. So when it's at too tight, that's always a problem. Yeah. But this one is easier to read using the MACD. You see the lower high, making lower high, so it's okay to stay with it and re-enter the trade. But this right now, that's a harder one. That's harder to stay with it because technical wise, this peak was lower on the last peak. I have a lower peak on the MACD. That make this trend, the momentum a little weaker on this uptrend. That explains that. So I will let it bounce around within this area at this point. And then if I see buyer comes in, I may add another one or just leave it and then wait for the breakup. Either break up or break down, then I have to take a loss. If break up, I'll add. And break up, retrace, it tests again, I'll add. Yeah. Now, sometimes we'll break up, retrace, come back down for a while, and then decide to break up again. Yeah. So you have to get yourself psychologically prepared for all the different types of scenario that you cannot get scared. You have to stay with your plan. The plan is unless it breaks down, the trend invalidated this uptrend, I want to buy every pullback, just like long-term investing. That's trend following. And you will take a lot of these small losses or intermediate losses before you establish one, latch onto one that give you a lot of return. Just like what I was saying yesterday, and I was dissecting Apple on this nice trend since the beginning of the year, and you would have banked out. You would it was a 40-point gain after 3 times at 3 times the positions on a 40-point gain. Think about that. Go back to yesterday's video, I'll explain how it would have played out on this nice uptrend and how you will basically bank every dollar on this because using trend following technique. False hammer giving you very little, but it's a very high probability trade. You use that combined into Doji channel into a trend following, and you're literally trading like a hedge fund. Except the difference, actually, hedge fund have do a lot more fundamental analysis, a lot more longer holding, and they have a team specialist to go after that. Meanwhile, as a retail single trader like us, right, we have limited time, resource, and we rely on more on established techniques and established analysis, and then you got to make a judgment on those. Right? So Apple was having this nice run. You catch on to this nice run. Wow, that would be great. That would be in it. A 40-point gain using the level 2 Doji channel technique. An Apple. Yeah. That would be something, right? But that's how you make the big buck. If you learn how to make a big buck. Yeah, right here. See, yesterday I was talking about this. An Apple. It went up and started doing sideways thing, broke down. Eventually turn around, right, and then broke above the midline of Doji channel. Yeah, first position. Second time, breaks up the level. Yeah, let's say another one, and then do this. Never break down below. You wait until it break out again. Third level. You add 3 times on your trade. You can even add more every step of the way. Break out, retrace. Whenever retrace below, look, the midline Doji channel, stay with that. So never had that break below and then add again. But it continue to break up. You can add here as a break up on this this bar, and the next level, break up, well, you might add here or somewhere here, and then finally you stay until either here when it break below mid low chain channel, because you're so loaded up already. You have like 3 to 5, 6, 7, 8 positions load up. You want to get out as soon as it break below. This is a tail, doesn't matter, but if it close below the Dogecoin channel, you want to take a bunch of profit because that's gonna come in, right? Of course, in hindsight, everything's perfect, but you look at this, all right? So from your final position, 3 times opening, adding 2% to this, that's a 40-point gain, not including the other ones. That's huge gain. This is why trend following works. This is long-term investing, basically, if you think about that. So the level 2 is trying to latch onto this trend and make the big buck. So what? I make the small losses here and there. When I latch on one of these trends, I'm adding to every breakout. And then you make a lot of gains instead of just doing the level 1. You get very high probability trade, but when you lose a lot more. That's the thing. Right? The higher the probability of those, of using options, selling options, that's the nature of selling options. But it feels good when you get a few winning trade, learning how to play the market, learning how to read the market. Those are practice. Now I'm going right into making the big one. But bear in mind, you will take a lot of small losses because nobody knows it's going to just chop around and break down, and you have to take losses here or take losses here. Yes, in a perfect hindsight, you get this. But in actuality, to latch on one of these, doing trend following traditionally, literally 70% of the time, you're managing losing trade, you're taking losses. But that 30% of the time that you're making gains, you get this huge gain and make back all your losses. So think about it. Wow, over a year, I say 70% of the time, like 7, 8 months of the time, I'm taking losses every month. Until those 3 months, you make a huge gain. So psychologically, it's very difficult. You have to understand that. So psychologically, it actually pulls you down. Until you latch onto one of these trades, like, oh my God, that is the right way to play. I don't mind taking small losses. Because when I latch on the big one, and imagine you latch on something like Tesla, oh my God, on the long term, right? Or Netflix, you want to continue to expand this time frame into a very long term time frame, into from daily into weekly chart, into monthly chart, into yearly chart, and that's where you latch on something that go from a few bucks all the way to thousands of dollars. Right? I mean, the stock itself, like Tesla, right? You latch on to trend following for 10 years on that guy, latch on to Amazon, latch on to Netflix. Imagine that. You are your own hedge fund. Wow, so in such short period of time, from nothing to everything, right? To learn the techniques, the principle behind. Now, you got to put it into practice. It's going to take you months, years to practice and put it into actual play. But you see the picture, I give you the big picture. I just gave you the big picture. So let's continue to learn, continue to explore, and see where can this take you. The material is out there. The knowledge are out there. It's up to you to dissect it, to absorb it, and become your own. And then you can become financially secure, financially independent. It's a long-term plan. You got to think of it of a 5, 7, 10, 15, 20 years plan. And you continue to accumulate all this wealth for the next 2 decades. Even when you retire, you can still play this. You're going to see it so clear. Like right now, I see it so clear what to do. Yeah. I mean, you will make a mistake here and there, I still make a lot of mistakes, but that's fine. Yeah. So like just like Lee, I was doing too early, or just like okay, I did some trade out there, so that's that. But expand is working out, so they offset each other eventually. Lee the most, I can see in actuality, even if it's turning into losing trade, right now on Fibonacci is 50% retracement goes back up. At this level, retracement, so that will be just a $3 loss on your share. That's fine, because I'm going for the huge gain, and when it turn around, I will buy it. I will buy the actual stock. Once I take a option trade on option loss, I turn it into a bigger trade in actuality. Not that I trace it back. I will find the stronger of the three. I will buy of those because I have a long-term fundamental bullish on these. Yeah. So that was news driven. Nothing substantial actually to warrant this move. Yeah. I think it's more of a knee jerk. So that's fine. XLE is in play right now and it's crapping out. That's fine. Yeah, you have to be able to ride the difficulties before making money. If it's so easy, everybody's a multi-millionaire. Yeah. Right. It need to be hard. It need to be difficult. It need to scare you out and scare out the weak one. Because that's the way it works in our world. Only the strong they get to the top. Survival of fitness, right? Trading is the essence of everything in this world. Reflect everything. You reflect the whole mankind, how mind, body, psychology, everything. Yeah. You understand trading? You understand? You can connect a lot of things to it. But it's fun. It's interesting to me. And yeah. So right now, today is going to be a red day, looks like, and then we'll see if there's a couple of red days before we turn around. So that's okay. Again, I have this whole range to work with before it shows its hand. I'm looking for adding position. I want to add positions, but if it breaks down, I won't add until it turns. I see buying pressure, selling pressure today. Yeah, market is flat, slightly up, selling pressure a little today. Okay, yeah, that's fine. If it breaks down below here, then I will get out first and then think about when to get back in. Maybe it's a knee-jerk reaction, it's a fake, and then the tail comes in and then it closes up here, then I gotta go back in, buy back in it towards the end of the day. Yeah. So a lot of scenario analysis, a lot of thinking ahead of the different type of scenarios that can happen after you open the trade, and you envision what you would do. But the theme stays the same. Breaks up, you have two choices. Take your profit or add in a position, make a bigger trend following. Breaks down, get out first. Always get out first. And then think about getting back in later. When cool off, and then when you see buyers, when you see confirmation of buying, then you get back in. If not, let it break down. Let it do its thing. The trend's over, done. You take your loss, find another one. Live to find another day. Reserves of capital. That's all. Breaks up, you have time to frame. Break, alright, because you're in the money. Do take profit or turn it to bigger trade, continue to compound up. Breaks down, you don't have to think. Get out first. Always get out. Okay? Take your loss, get out first. And then think about come back later. Don't let it take you down and then you don't want to. Don't freeze, basically. If it break down, here's the thing. The daily bar is breaking down. What do? Do you get out right away or let it break down until the end of the day? Well, it depends, to tell you the truth. If it's a momentum breakdown, you want to get out fast. If it's just drifting down and then testing around here, you get out first. Yeah, let's see what it does. It close back up. Maybe you want to get back in. Maybe just chopping around. But it's a momentum big bar coming down. A volume spike, right? And the ATR spike. Yeah, you want to get out. Yeah. So that's how it works in actuality. And that makes sense. That makes perfect sense because you have to be quick on your feet to dodge bullets. But when you're winning, you have time to think. You have time to think whether you want to add to turn it into a bigger trade, or do you want to take your profit. If it's, so again, depends on momentum, I would say. If it's a huge bar breakout, sometimes the worst is like, it breaks up a little and stay there. Breaks up a little bit there. And then a couple bars later, it starts ripping up and you got out already. And you're like, oh my God. And that's the nature of trading. So you have to decide beforehand, do I want to take the big trade or do I want to just take the small profit? Add to. And that's a more advanced level from reading and thinking and analyzing all the correlated factors. So it's all these building block is, I'm going actually really fast in actuality every time I look back of materials I'm covering, but that's so much I want to cover. I want to get out there. I can see already down the line. I have to do separate lessons, break everything down further into more details. Right now is a bottom macro of what's going on in my thoughts, what I'm trading, in that sense. Well, it just came back to me. I remember what ATR is because I have so many thoughts in my head. It's average true range, volatility base. Right? So this is compressing. The average true range is low. When it starts making move like these, this range expand, average true range expand. You can see as this channel, the whole thing is huge versus over here, it's much narrower. So when it compress and then when it expand, that means volatility spike. I should see volume spike on this too, in that sense. So right now, the volume is holding pretty nicely. You have to wait for end of day for this to come in. So that's that. We're going to leave it. It's still within the range. Now, if you want to, you're more risk-averse, then you will have to get out here and then think about open the trade later on if it does that. Yeah. Now I'm thinking, what is this going to do one of these? This is still kind of an inside bar, but it's a momentum. But this upside down false hammer really hurt, and then they make new low and then the buyers finally back. This is the bar that let's say, for example, if you bought the breakout here, right? This is the previous peak, and then the breakout here, you bought here. We break down below and they do this. This is worrisome and do this. Right? This is why if you set your stop loss too tight, you get whipped out. This is a true stop loss again. Right now, our stop loss here, the previous breakout, if you break out here, bought it, your stop loss should be previous low, which is over here. And you never touch it. You never touch it. Although you bought here, right now you're still not making any money. But it did not break down yet. It's still on an uptrend. Yeah. It crawls back over here. Actually, yeah, that was really now. Crawls back down and then it crawls back up. That's why you add, or I initiate the position over here, and you have a previous trade, you would have add here. So right now I'm looking for break up and then continue. It's a wave of up, making higher lows and high. That's uptrend. My definition of uptrend: higher lows, higher high. Your definition of uptrend. And it's going to do this wave thing. This is why the actual real final stop loss should be here. Unless you go for the quick intraday trade, which is 3-5 days, then yeah. But to me, this is the actual play. And I'm thinking, break down, I get out. Don't have to think about it. Breaks up, I gotta consider, do I add to the positions? Do I take the breakout trade? Right now, let it do its thing. It might drift down. It might go around here and then goes up. Oh, come back down and then go back up. Those are the painful because it penetrates deep. Right? Does it penetrate the next level? The question becomes. Right? The next level is here. The previous low. Right, we break down that. It's going to break the next level. Yeah. So yes, level 2 is more advanced play, I have to say, of course, versus level 1. It's a lot more involved psychologically. It's a lot more fun actually. Try to read the market, try to figure out what to do, what it can do, what it might do, and what you're gonna do. You anticipate, you have plan A, plan B, plan C, and then plan D happen. And what are you gonna do? You have to make your decision fast. You have to analyze and do that. Right? That's the true test. If what you're gonna do, if things go outside your plan A, B, C, D, E. Right. And that's where experience comes. Okay, that's that about for this morning. We'll leave it at that. Last trading day of the month. The market is just flat, pretty flat. Nothing really much going on, rounding back up. So that's a nice thing. Yeah, XLE is coming in right now. Who knows when it's gonna stop? Yeah. The other guys. Yeah. Let's take a quick look at the other guys. Right. Google broke up, retrace. Oh, do I have a play? The question becomes. Oh no. That's here. Okay. Yeah. See, it break up this level, came back down, but still above the previous low of this channel, this whole box, so that's fine. But it's heavy. We think it's a little heavy on the beginning, first month of this quarter. Oh, this is Doji star, look like upside down. Yeah, Meta is. Until it break this high, it previous peak, there's no play of this guy. Although we saw a lot of tail. I saw these nice tail, but it has to break a clean break. That's a resistance, and then the next resistance is here. Yeah, but look at this, nice uptrend. Start A, B, C. It might do another thing. It might try to shoot up again. So let's put it on the watch. Tesla, bottom. Yeah, momentum died down. Okay, yeah, it is what it is. So much things marked. Yeah, you have to clear here, but then you have to clear here. So, yeah, market got to be in a really good mood to break this. That would be interesting to watch. Amazon. Oh, Amazon just prepped out. Yeah, Netflix. Nothing much on these big boys. We have such a nice one first half of the year, so yeah. Wish I would have introduced trend following towards the end of last quarter of 22. Then we'll have latched on a lot of this year's first 2 quarters trend and make really good gain, right? But that's how it is. Yeah. But never too late to learn. Okay. Yeah, these the usual candidates. I mean, why am I looking at these semis? Because this whole first half year was about semis, AI, NVIDIA. So that's why they're trending. That's why I'm having it on top of my list. If the other sectors are trending, that will be the top of my list. Then I will switch those. I play what's hot, what's in play across the market. That's where you're gonna find trend. Not the guys that nobody look at, nobody care. As I go down. 4 GM, whatever. Bank covering out this year, so yeah, whatever. Yeah, they're just fighting every step of the way. Okay, that's about it for today. That ends the month. We have a few open trade. They're just kind of doing their thing, and we have to wait till further development to decide when to enter position, or if it breaks down, then just don't think about it and then get out of the trade. Take losses and come back later. Always come back later, and see if the trend reestablish itself. We continue to look for these false hammer here and there. Now we got 2 types of play. That's just great. Right? So thanks for watching, And if anything of interest, I'll post up another video later on. If not, and have a great weekend. And then next week we start again and have more fun. Have a great weekend, everyone.